everyone, and welcome to this Trybe meeting. I'm super excited and delighted to be here with you this evening. This evening I'll be talking about where to invest in 2026, and like I shared, this is an offshoot of Money Conversations with Esther 2026, where we talked about different aspects of our financial lives. So in this video, there is a post MCWE webinar. We're just going to be looking at different places you can invest your money in 2026. Again, my name is Esther, and I'm very, very excited to be doing this with you this evening. So let's get right into it. Why do you need to invest? Why should I invest? Number one, one very important reason why you need to invest is because of what we call future value and present value of money in finance. Future value and present value of money in finance. So it just basically means that the value of your money in the future is not going to be the same as the value of the money that you have right now. So what your 100k can afford in right now, like in the present today, right? That same 100k cannot afford that thing in the next 3 months, in the next 5 months, in the next 1 year, in the next 5 years, right? Because the value of money today would always be greater than the value of money in the future, right? So investment actually helps you ensure that the future value of your money, of what you have today, the future value of your money would always be commensurate to the present value of your money. And I'll try to break it down even further. So in finance, we have fund managers, right? And when fund managers are, appraising an investment, they try to appraise that investment to ensure that when they discount the future value. So for example, if there's an investment that you invest 100k today, right, to get 10 million in the next 5 years, right, they will discount that 10 million that you are getting in the next 5 years to the present value, and they are trying to find out, would that 10 million that you're getting in the next 5 years, will it be equal to the 100k that you're investing in it now? So that's just what investment does for you. Investment tries to ensure that the future value of your money is preserved, right? Is preserved to look like what the present value of money is today. And another reason why you need to invest is because of unstable economic climates. We live in an economic climate that is very, very sensitive, right? A lot of things can happen, government policies, interest rates, FX rates, and all that. So you need to have your money invested in assets that would actually buffer the effects of this economic climate, unstable economic climate, all these changes in the economy and all that. You need to have your money invested, right? And that reason why you need to invest is investment helps you build wealth through returns. Investment helps you build wealth through returns. So saving alone won't make money for you. Saving alone won't build wealth for you. When it comes to the actual journey of wealth, when it comes to the actual journey of wealth, you have to talk investment. Investment is how you actually build wealth, not saving. Saving even actually opens your money up to devaluation, right? Because the money that is just in your account is just idle. The value is going down every single day. And now I'm not saying that savings is a bad thing. Saving is actually a fantastic start in your financial life. You have to save first before you invest, because if you don't have anything that you have saved, you cannot invest. It's only when you've saved something that you can actually invest. Do you see that? So you have to actually save something to be able to invest, right? So yes, so you build wealth through return. So again, the future value of money, you have to invest to ensure that the future value of your money is preserved to be equal or commensurate to the present value of your money. You have to also invest because of unstable economic climate, to ensure that your money is being protected from unstable economic climate. And then number 3, you have to invest because that is actually how you build wealth. You build wealth through the returns in your investment. Okay. So the next thing I want to talk about is systems. Now, before you start investing, you must have systems in place. You must have systems in place. You do not just invest like that and your financial life is in shambles, right? And that's why we see people, they invest this month and then the next month they go and withdraw the money from their investment because they need it to quickly or just settle something urgently in their financial life and all that. You must have a system that in your financial life that's already working for you, that's already taking care of your present needs as well as your future goal, right? So a money system guides the way you handle your cash flow. Money system guides the way you handle your cash flow, and there are different components to the money system. I think we shared a lot of this in Money Conversations with Esther, so I'm just going to brush through, right? Of course, the mind structure, you must have a great mindset about making money, right? Our slogan in Financial Sabi with Esther is that you deserve to be wealthy. You must understand that you are deserving of wealth, right? And wealth opportunities are bound and they flow to you, right? You must have the right mindset when it comes to making money and building wealth. And then number two, is what I call PYF. So PYF is a very critical part of your money system that ensures that your future goals are serviced, that ensure that your wealth is being built for you. So out of every income that you make on a monthly basis, a portion of that income has to be sent into your future, right? Has to be sent into your future. A portion of that income must be put into credible investments that will make money for you. That's PYF. So whether it's going to be 10%, 20%, 30%, 40% of your income, depending on what you can carry, right? That should be sent into your future. That takes care of your future goal. Then of course there's the budgeting aspect that takes care of your present needs, money for your feeding, transportation, clothing, wants, enjoying yourself and all that, because you must also take care of yourself in the present in as much as you are handling your future, right? The next part of a money system that I want you to have is automation. And thanks to God, we have a lot of apps today that can actually help you automate your financial processes. We have apps that can actually help you automate your saving, automate your investments, and all that and all that. All these apps would actually help you, have that robust and structured, financial system around your money. All right. So you must have a system in your financial life that actually helps you have a structured way around the way you handle your money. Now let's go into why we are truly here. Before you start investing, there's something you must have at the back of your mind. You must understand where the money is flowing in your economy, right? There's something we say in economics that macros would always influence micros, meaning that the economy of a nation, the economy of the country that you find yourself, the things that happen in that economy would always affect and influence the things that are happening in your personal finance life, right? So if the economy is going well, right? If the economy is going well, you see that the standard of living of the people in that country would be doing well. And that's why you see a lot of people wanting to japa. Why are they japaing? It's not because they don't enjoy Nigeria, but the economies of those other countries are very well. They are very stable, right? And that means that the standard of living of the people living in those countries are also good, right? So you have to understand what is happening in the economy of your country so that you can know the right places to invest your money, right? So these are some key economic indicators in Nigeria right now. The first one is dollar stability, right? In the years 2021, 22, 23, and 24, and even early parts of 25, we saw the whole dollar naira this thing, right? When Tinubu came in and he unified the exchange rates and all that, we saw dollar skyrocket, from I think it was around 700 and something or 800 and something. We saw it shoot up to 1.5, and everywhere was shaking. People were panicking and all that, and a lot of financial advice at that time was to save in dollar. Why? Because dollar at that point was an instrument. Save in dollar and invest in dollar. Why? Because dollar at that point was an instrument for hedging. So we are trying to hedge against the devaluation of naira, right? We are using dollar as an instrument to hedge against the devaluation of naira. We even saw at the point it was 19, almost heading to 2000. I think in some black market it actually hit 2000 and all that, right? So it was a mess, right? But in the present time, right, with the fiscal policies that our current administration has rolled out, and of course the foreign investments that has come in this recent time, we can see that the dollar naira exchange rate has actually stabilized. We are now in an era where we are seeing dollar around 1.4, 1.450, 1.420, and all that. And this is a very key economic indicator for you to know how to restructure your investment portfolio in 2026. Another economic indicator I want you to pay attention to is the inflation rate, right? Inflation simply means the rate at which the prices and goods and services changes over time, right? Again, in the previous years, 23, 24, we saw inflation rate 25. We saw inflation rates shoot up. I think when I was preparing these slides, I had to do a bit of research. I think in I've forgotten the particular period, but I think it was sometime in 2024 or 2023, where we saw inflation rate hit 30%, right? So, I mean, it was a very crazy season. And of course, the CBN government, in conjunction with, the federal government and all that, they were all trying their possible best to curtail inflation. And right about now, because of the fiscal policies and, reforms that has been pushed out, we have seen inflation. The current inflation statistics of Nigeria right now is 15.5%, right? 15.5%. And that's a very strong indicator for you as an investor. Why? Because inflation rate did not just drop by itself. It dropped because of something that the government was doing. It dropped because of something that has changed in the economy. And that leads me to my second point, MPR. What is MPR? MPR is monetary policy rate. It's the rate for investing and borrowing in an economy. It's set by the CBN, right? It's a CBN rate that regulates the amount of money in an economy. So, but when inflation was high, when inflation was reaching 30, 28, all those crazy numbers, one thing that the CBN governor did was that he increased MPR, right? He was trying to curtail the amount of money flowing in the economy. When there's too much money flowing in an economy, right, there's too much money going around, right, it generally will make the prices of goods and services shoot up. And that was one of the things that was pushing hard, that pushes inflation rates to go up. So when it was going up, MPR rates also was going up, because the CBN government was trying to, curtail inflation rates, right? So you see that the prices of your savings deposit, your fixed deposit and all that, it's also shot up, right? The prices, the interest rate on treasury bills, commercial papers, all those fixed income investments, it was going up. We are seeing treasury bills hitting 20%, 21%, federal government bonds hitting 20%, 21%, right? Because the government was trying to curtail the spending in the economy and, the borrowing in the economy, and encourage people to save and invest more, right? But right now, the inflation rate has dropped, and we can see that the MPR rate has started dropping. The last MPR meeting, it dropped from 27.5% to 27% that we have now, and it will still continue to drop because inflation and dollar stability has come in a bit, right? And what has that done? That has actually made fixed income investment to actually start dropping. So if you've been following me for a while, right, in 2024 and 2025, yes, particularly in 2025, I was preaching a lot about fixed income investment. I was preaching about commercial papers, treasury bills, FGN saving bonds, and all that. Why? Because the interest rates were so amazing last year, right? But this year, I'm going to die down on that again, right? Not because they are bad investment, they're still amazing investment, particularly for people that are looking for low risk investment, but their interest rates are dropping. I think last week I saw treasury bills in a bank at 13%, at 12%, and all that, and that's like a far cry from coming from 2025, the kind of rates that we got in 2025. So because of the stability in the economy now, fixed income investments are dropping, and we are seeing more capital market activities. More people are flowing their investment into stock markets, right? We are seeing more influx in the stock market. In fact, particularly both in the normal stock market and in the mutual funds that are reflecting the stock market. There's a particular mutual fund that I have that is mirroring the stock market, and just this year it has gone up by over 7.something%. Just this year, just within 20 something days of the year, it has already done over 7% and all that, right? So we are seeing more capital market activities. More people are putting in capital inside the stock market and all that. So as an investor, you have to note all these key economic indicators, so you can now know, okay, where are the best possible places for me to put my money and make more money in 2026. You have to have these information so you can make the right investment choices and the right investment decisions in 2026. Okay, so these are the places that I will be investing in 2026. And please, this is a bit of disclaimer. This is not investment advice. This is just education and recommendation. My only advice is that you should do your due diligence in all of these things I'm showing you this evening, right, before you make the final investment decision. This is not me telling you must invest this. This is not investment advice. This is just education, right? But these are the places that I'll be investing my money majorly in 2026. The first place is high HSAs, that's high interest savings account. I'm going to explain all of these things in details as we go on. High yield interest savings account. The next one is mutual funds. The next one is dollar denominated funds. The next one is stocks and ETFs. And the final one is gold. Now let me explain all of this in details. High yield savings accounts. So high yield savings accounts are majorly, savings accounts, right, that gives you high interest more than your normal bank saving account. So in banks, your interest rates are around 4%, 5%, 6% at most, and all that, right? But with high yield interest savings account, you are making more money than when you just leave your money idle in the bank. And this is perfect for you if you have money you're saving towards emergency funds, you have money you're saving towards a short-term goal. Maybe you want to buy a new appliance for your business, you want to, you're saving up for school, you're saving up for house rent, you're saving up for whatever it is, for your wedding, whatever short-term goal that you have, right? You're just saving up money, but you want your capital to be preserved, but you want to be making money on top of that. And more than your capital to be preserved, you want that money to be, readily available as at the point you need it. Then you can do high yield interest savings account. This, like I said, they are perfect for all these types of short-term projects, and of course for your emergency funds. So with apps like PiggyVest, CarryWise, Pluto's New, and all that, you can get interest as high as 15 to 20%. You can get interest as high as 15 to 20%. And there are a lot of features that these apps have that actually makes this thing very, very interesting and very, very good for you. We have features like automated savings, right? So you set it up that, okay, maybe you want it that every first of every month the app would debit your account and help you save, or maybe you want it to be saving for you every week. Some apps even do daily. I think CarryWise even does daily. CarryWise and PiggyVest, they do daily savings for you. It just helps you stick to that target. Maybe you have a target, you want to save up X amount of money because you want to buy this and this and this, you want to do this and this and this. Maybe like I said, for your school fees, you have a school fees target of maybe 500,000 or whatever, and you want to save money towards it, and you want something that will help you stay disciplined to hit that target. Then you can do all these high interest savings accounts, right? Like I said, they help you, with your targeted savings plans with the automated features. You can actually do that. And then another feature that I like is their safe lock feature, right? When you safe lock funds with these apps, they would not give you that money until its maturity date. And this actually helps for people that are not disciplined, right? You keep going to remove money from the savings that you say you're keeping for something. When you put your money into their safe lock features, that money cannot be touched until the maturity date. Until the maturity date, that's the new time you can break that funds and take that money, right? And like I said, this is an amazing place to put your money in 2026 because it gives you more returns than your normal bank savings account. Again, at this point, you're not really like investing, but this is money that you're just keeping because you need at a certain time, but you don't want the money to just stay idle. You want the money to be, bringing returns for you. And most of these apps, you would even see your returns every month. Like every month, the returns will be reflected on your wallet. You can see that, this savings has done for you, that's done 20,000 for you, 30,000 for you, depending on, the interest rate and, the amount that you put into that the savings account, right? So this is the first place I'll put in my money in 2026. The next place is mutual funds. What are mutual funds? Mutual funds are investments that are managed for you by fund managers. So with mutual funds, this is like a very great way to start for beginner investors. So you're not bothering your head about, how do I start investing? Which one should I invest in first? Should I do commercial papers? Should I do treasury bills? Should I buy MTN? Should I buy Nestle? Should I buy UB? These are the questions that, first-time investors are always bothered about because they want to make the best decisions with their money. And this is like a solution to those questions in your heart. If you're still concerned about what to invest in first, you don't still understand how investment works, then a good way you can actually start putting your money, a good place you can actually start putting your money is mutual funds. So mutual funds are investment that are managed by fund managers. Fund managers are investment professionals working with all these investment banks. What they do is that when you put in your money alongside with other investors' money, they take that money and they invest it in different assets, different classes of assets. And when these assets are performing and bringing in money, right, they'll be paying you your returns on investment on that mutual funds. There are different types of mutual funds. We have fixed income mutual funds. These are mutual funds that mirror the performance, or these are mutual funds that are invested into fixed income assets, right? Fixed income assets like commercial papers, treasury bills, and all that. That's what fixed income mutual funds are. So in these fixed income mutual funds, the fund managers, they take investors' money and they invest it into fixed income securities. So this type of mutual fund is a bit more safe and, stable, right, than other mutual funds. We also have equity mutual funds. So this is particularly where I invest my money a lot. So equity mutual funds are mutual funds that the fund managers invest your money into different types of stocks in the stock market. So equity mutual funds are, they bring in more return than the fixed income mutual funds. However, their returns are not fixed. Their returns are not fixed because the performance of that mutual fund, of equity mutual funds, is based on the underlying asset. So if the asset is doing very well, if the assets of the equity, if the stocks that that are inside the equity mutual funds are doing very well, the mutual fund will reflect that performance. The mutual funds will be going up. If the performance are not doing well, the mutual funds will also reflect that performance, right? So these are different types of mutual funds that you can find in the CarryWise app. So mutual funds, you can do it in either Pluto's New and CarryWise app, right? So in CarryWise app, this is just an example of the types of mutual funds. I think there are around 15 or so mutual funds in CarryWise. You see, these are just some examples. There's CarryWise investment portfolio that's done 17%. There's Vetiva 16.5. There's United Capital 15%. There's Afri Invest Pluto's New, Pluto's 400 at 15%, and all that. So there are different mutual funds. And one beautiful thing is that these fund managers would always show you composition of what they're investing your money into. For example, look at this. These are two types of mutual funds. The first one is basically an equity mutual fund. So you can see that 89% of your money is going to be invested in stocks and 11% is in money market. So each mutual fund manager will show you a composition of how they're investing your money, right? So even though you're not the one doing the investment, but they still want you to know where your money is going into. Then the next one, you can see that the composition is that 60 to 80% is going into stocks, then 20 to 30% is going into fixed income investment. So every mutual fund would always carry you along to show you where your money is even going into. Look at another one. This is a balanced portfolio where 40 to 50% is going into stocks, 40 to 50% again is going. So it's balanced. There's a bit in equity markets, there's a bit in fixed income investment, and all that to just help you manage risk. So that's for mutual fund. It's a great way to start if you're a beginner investor that doesn't know where to put their money in, right? So that's a great way to start. The next place I'm putting my money in 2026 is dollar funds. And I know a lot of people will be like, but I thought you said that dollar is stabilizing. Why are you not still putting money in dollar when you know that Naira is rising and all that? Remember what I said. At that point in 2022, 2023, 2024, we were investing in dollar because we are trying to hedge against Naira devaluation. But right about now, the motive has changed. So dollar is no longer an instrument for hedging against Naira devaluation. Dollar is now more or less an instrument for wealth creation. It's no longer for hedging. It's no longer for hedging against devaluation of Naira. It's now an instrument for building wealth, right? Well, it has always been an instrument for building wealth, but the motive for why we're investing in 2022, 2023 has changed. So yeah, why do you need to invest? Why should I invest in dollar funds? Number one, exposure to foreign currency. There's this joy just knowing that your portfolio. In fact, I think sometime last week I was just taking stock. That's one of the things I did this new year. I was taking stock of everything in my portfolio, in my different apps that I used to invest, my Bamboo, my CarryWise, and I was just taking stocks of all my investments in my different apps. And there was this joy just knowing that, I have investments in dollars. Do you understand? There's this happiness, there's this joy, no matter the amount, right? And that's another thing. Don't think that you need to have millions to do all these types of investments, right? Even with these dollar funds, you can start with as low as 10K. with an app like RiseVest. You can start as low as 10K to start investing in, dollar funds and all that. So there's this joy knowing that you have exposure in foreign currency in your portfolio. And more than having exposure in foreign currency, there's this, investing in dollar funds actually gives you, the access to earn beyond Naira. So your portfolio is not just only bringing Naira returns for you, you are also having returns in dollars. I don't know how to explain this feeling, but it's just so amazing, right? So these are the reasons why we invest in dollar funds, to have exposure to foreign currency in your portfolio, and also, of course, to earn beyond Naira. But however, when you're investing in dollar funds, exercise caution, because if currency fluctuates, you have to exercise caution when you're investing in this type of investment, because currency fluctuates. Remember that in previous years, dollar was higher and Naira was lower. Now we're seeing a reversal. Naira is gaining. It's not that Naira is higher, but Naira is gaining, right? So the dollar price is falling and the Naira price is high, is increasing and all that, right? I wanted to say Naira price is high, well, you get my point. The Naira price is going up and all that. So this is not the type of investment that you go and carry your life savings and put inside. I beg of you, please, when you're investing in foreign currency, you have to be very cautious. You don't put all your money inside foreign currency investment. You have to take it bit by bit, as much as you can accommodate at every particular stage, right? Don't go and carry your entire life savings and put inside dollar investment because Esther said you should invest in dollars, right? So exercise caution while investing in dollar funds. So how do you invest in dollar funds? For one, I use RiseVest for most of my dollar investments. RiseVest is an amazing app that gives you exposure to US dollars fund, and there are different types of funds in RiseVest. The first one is fixed income funds. What are fixed income funds? Fixed income funds are basically funds in dollar that the fund managers, again, these dollar funds are like mutual funds. Remember mutual funds where I told you that you're not the one thinking about what to invest, but the fund managers are the one that are managing your portfolio for you. Fixed income investment funds, these fund managers will take your money and invest in fixed income assets and securities in the US, in the United States. So their treasury bills, their corporate bonds, their sovereign bonds, are the US bonds, all those fixed income investments in the US, the fund managers will take your money and put there. And for fixed income, your capital is guaranteed and your return is guaranteed. And right about now, it's about 10%. So your capital is safe. There's nothing like market has crashed or your capital has wiped off. No, your capital is saved and your guarantee is also saved. Your returns rather is also saved, right? So that's fixed income investment. Is very low risk, it's very stable, and it's your capital is safe from any type of risk. The second type of dollar fund you can do with RiseVest is the real estate funds. So in this type of dollar fund, the real estate fund, the fund manager will take your the fund manager would take your money and invest in real estate in the US stock market. They buy rental properties in the US, not the US stock market. In the US, they buy rental properties, maybe buildings, offices, housing, apartments, and all that. And they give you returns based on the performance of those rental properties. And in this one, your capital is safe, but the returns are not fixed. The returns are based off of the performance of the rental properties that they buy with your money, right? I'll still show you a composition that shows how all of this works, but that's basically how it works. And right about now, the return is about 12 to 15% per annum, right? That's the return. And the beautiful thing about this dollar funds is that every month they'll be giving you your return. Your returns are paid into your wallet. I've been using RiseVest for over, I think, 2 years now or so. I think 2 years, right? I've been using RiseVest, and every month you are getting your returns paid into your wallet, except you choose the option of reinvesting. For one, most of my funds I did reinvest in, so the returns are automatically reinvested into my into my wallet, right? So that's for real estate investments. Your money is invested into rental properties in the United States. And then for equity funds, the fund managers would invest your money across different selected US stock markets that are doing well. Now this one gives like the highest return. I think last year I got about 18% return on this one. 18% return on this one, and it's very fantastic. But so that the guarantee is the returns are not fixed like fixed income. The returns are not fixed. And of course your capital is also as risk, because your capital is actually invested in real businesses and real companies, real stocks of companies, and the market can actually go funny at any time, but the returns are actually very, very pleasant. The returns are actually very, very good, right? So that's for equity funds. And let me just show you a little bit of how this looks like. So this is growth stocks. So this is like the dollar fund in Rise Vest. So it just shows you that we are investing your money across 20 to 30%. Remember what I said, that fund managers will always tell you what they're investing your money inside. And you can see that this fund has that's Alphabet, that's Google, that's that's Microsoft, rather, not Google, that's Microsoft, there's Nvidia, and a whole lot of other investments. You can see that the risk level is high, because of course it is equities, and it can rise and fall as the market fluctuates and all that. So that is it. The expected returns is dependent on the market, like I had shared earlier. And then the next one is the real estate funds. You can see that it's ideal for investors that are looking for a balance between good returns and medium returns. It has returned 12 to 15% per annum. You can see that they're investing across rental properties in United States to generate steady returns for you. So your capital is guaranteed here, but the returns are not guaranteed. It's based off of the performance of this real estate. But when you come to fixed income, you see that both your capital and your returns are guaranteed, because the risk is very low here. They're just investing in corporate bonds, sovereign bonds, and all those things come with very, very low risk. So your capital and your returns are safe and guaranteed. So that's that for dollar bond. The next place I'm going to be investing my money in 2026 is the stock market. So what is stock? Stock investing is simply you buying into the ownership of a company. Stock is you simply buying into the ownership of a company. As an investor, when you buy shares of a company, right, it means that you have become a shareholder, a part owner of that company. Let me give you this analogy. So let's take, for example, that a company, let's liken a company to a cake, right, that I buy, and then in that cake I now cut it into 12 different slices. So when you give me money, which means you're investing into my company, I'll give you a slice of that cake. So by me giving you a slice of that cake, you're now a part owner of my company. You now own a portion of my company. Remember that the cake is like my company. So when you give me money and I give you that slice, you're now a owner of that portion of my company. That's what it means to invest in the stock market. So you are buying into the ownership of a company. Anytime you buy a share of a company, whether it's 1 unit or 10 unit or 10 shares or 10 stocks, they are all the same thing. Shares and stocks is the same thing. It's just used it's just used interchangeably, right? Shares and stocks, they mean the same thing. They just mean units of ownership of a company. So if you are buying 10 shares, it means you are buying 10 units of a company. You are buying 10 shares of that company, 10 stocks of that company, right? So as a shareholder, you make money in two ways. The first way is by what we call capital gain. What is capital gain? Capital gain simply means that when the value of the stock that you buy increases over time. So for example, you buy a stock at 100 naira per share, right? You buy a stock at 100 naira per share, and maybe somewhere along the line, maybe in the next 6 months, in the next 1 year, that stock that you bought at 100 naira per share is now 200 naira per share. That means you've made 100% return on your investment, right? That's capital gain. You've made extra 100 naira on that share. That's capital gain. The next way you make money in the stock market is by what we call dividend payment. So what's dividend payment? Dividend payment is simply when dividend payment is simply when when companies pay out profits to their investors. So a company can make profits in a year and then decide that, this portion of our profits, we're going to pay it out to investors. It's just a way to say thank you to the investors for investing in the business, right? So you see companies like UBA coming out to say that we are doing 5 naira per share to all the investors, we are doing 10 naira per share to all the investors, and all that. So that's just another way, right, that investors make money from the stock market. So how do you invest in the stock market? You can invest in the stock market. You can invest in stocks of company using apps like Bamboo app or Trove app. They give you access to both the Nigerian stock market and the US stock market. So yes, with these two apps, you can do both Nigerian shares and US shares. And again, you don't need to have millions to start investing. You can buy there are Nigerian shares that are less than 100 naira per share. There even ones that are 5 naira per share, 10 naira per share. So that money they're using to eat shawarma every day, you can actually use it to start building portfolio for yourself, right? You can start with 5k, you can start with 10k monthly and buy shares of company. Even the US stocks. Now US stocks, you can see shares of, $100 per share, $300 per share and all that. But even if you don't have $300 per share to buy US stocks, you can do what we call fractional investing, fractional shareholding, right? And that's one beautiful thing that these fintech apps have done for us. You know that, not all people have access to, a huge amount of money to buy these shares. So even with your $10, even with your $5, even with your $1, I think I've shared a tutorial video on my Instagram page where I used $1 to buy a share, just to show people that I can actually buy $1. Even if it's $1, you can buy fractional ownership of these shares, right? You can buy fractional portions of a share in a company, right? And one thing is that you're not even disadvantaged. Even with your fractional share, if a stock did 100% return, that your fraction will still do 100% return. So even if you invested $1 in a stock that they are selling at $300, and then that $300 stock did 100% return, that your $1 will still do 100% return. So your $1 will become $2. So there is no, in quote, discrimination. Whatever the people that bought a whole unit get, you too that they are buying fractional share, it would also reflect for you, right? So you can buy shares using app like Bamboo and Trove. And Bamboo and Trove, like I said, gives you access to US and Nigerian stock market. Afri Investor is only Nigerian stocks, right? And so on and so forth. So, and you have to register. Of course, this stock market is a regulated market because they want to ensure that both the investors and the companies are safe, right? So you have to submit your KYC document, your ID card, and all those things that they ask of you. And when you are done with your registration, you get 2 numbers. You get your CSCS number and your CHN number. These numbers are like your identities in the stock market. The CSCS number is like a number that is like your account number in the stock market. Let me just say it like that. So just like you go to UBA and you open an account, you'll be given an account number. That's like your account number with the broker, with the brokerage firm that you're investing in, right? So if you go to Afri Investor and you download Afri Investor, register Afri Investor, open your account with Afri Investor, they'll give you a CSCS number. That CSCS number is your account number in Afri Investor that would allow you access the stock market. If you go to Bamboo will give you that CSCS number, right? That CSCS number is your account number in Bamboo that will give you access to the stock market. But when you now talk about your CHN number is like your BVN. So whether you have an account, for example, now let me also relate it to the normal banks that you know. If you have an account in UB, you have a different account number. If you have an account in First Bank give you their own account number. But there's a central number that connects all your account number, and that is your BVN, right? So your CHN, just like your BVN is central in your normal bank account, your CHN is central. So your CHN is like unique to you, right, in the stock market. But your CSCS number, varies based on the different brokerage firms that you open using different apps. And I'm not saying that to confuse you, but you need to know these 2 numbers, because in the event of anything happening, is these 2 numbers that you used to use and trace your stocks. Maybe you want to transfer your shares to another brokerage firm. In fact, I've heard people come to ask me, if I buy shares in Bamboo, would it also reflect in my app in Afri Invest? No, it will not reflect in your app in Afri Invest, because you have two different CXCS number. Bamboo has a different CSCS number and Afri Invest has a different CSCS number. But in the case where you want to transfer your shares from Afri Invest, you no longer want your shares to be managed by Afri Invest Securities, for example. You now want to put everything in Bamboo. It's these 2 numbers that you use to do share transference to the brokerage firm that you want to have everything together with. So it's very important that you note those 2 numbers down. And then of course you have to fund and invest in those stocks that you want to invest in, right? So it's just very simple. Register, fund your account, and start investing, right? So there are different sectors in the stock market. These are different sectors and different stocks that you can actually start investing in the stock market. Again, this is not financial advice. This is just recommendation and education. Ensure to do your due diligence before you start investing, right? So in the energy sector, we have Transcorp, we have Geregu, we have Seplat. In industrial goods, we have Dangote Cement, Boa Cement, Lafarge. In agriculture, we have Okumo Oil, we have Presco, we have Ella Lakes, we have FTN Cocoa. In telecommunications, we have MTN, Airtel, Charm, CWG, and all that. In banking, we have UBA, GTCO, Zenith Bank. In consumer goods, we have Nestle, BUA, Boa Foods, we have Guinness. The idea is that in each of these sectors, look at the ones that you use on a day-to-day activity. Don't just be a consumer in 2026, be an investor. Don't just be a consumer in 2026. Decide that in 2026 you are going to be an investor. Invest in all these companies that you use on a day-to-day basis. You buy data every day. You buy airtime, right? You drink milk and Milo. Invest in these companies, right? You go to bank, you use your bank every day, you do transfers, they charge you bank charges, they do everything to you. Invest in them so you can also, have access to their profitabilities. Let them not just make money off you, you also make money off them, right? So these are different sectors and different companies that you can actually buy their stocks in these different sectors. Okay, this is just like to show you different stocks and how they performed in 2025. You can see these are the top 10 performing stocks in 2025. Yeah, you see NCR did about 1,355% return in 2025, right? Better Lakes did 470% return in 2025. Mutual Benefits did 408% return in 2025. Guinness did 398% in 2025. Mikio did 396% in 2025. Vitafoam did 300%, and all that. When it comes to banking, Wema Bank was like the highest performing stock in 2025. It did 124% in 2025. Stanbic did 73%. First Bank did 70%. GT Bank did 50%. Zenith Bank did 35%, and all that. So you have to, look at these banks and, ensure that you have some of them in your portfolio in 2026. Okay? Then the next place, now let me move to the final investment I want to do in 2026, and that is gold. I read about gold and I was like, what? And the funny thing is that this thing has actually been in my mind to invest in since 2023. Or 2024, I don't know. I think it was 2024. It was actually in my mind to invest in gold since 2024. I was just dilly-dallying. And that's one thing about procrastination when it comes to investment, right? When it comes to investment, the more you procrastinate, the higher your chances of losing money in that investment. And I will show you why this thing is pinning me, right? Okay, but this is a promise I've made myself that this year I will be very, very intentional about investing in gold. Gold is a very, very silent wealth builder. And to think that it has been around since time immemorial, right? And its value is still like very, very, relevant. In fact, even a small child knows that gold is valuable. A small child might not know about stocks. They might not know about commercial paper. They might not know about your treasury bills and all that, your mutual funds. But they know that gold is what is relevant. They know that gold is of value, right? So in 2025, gold did 65% return for investors. And then we see gold ETFs, right? So there are things called ETFs. I'll still show you what that is, right, as we go on. Gold ETFs, they actually performed higher than the US stock market. They were doing 128, 125% return in 2025, right? And even in 2026, it has actually still continued that skyrocketing, right? I've seen some of the ETFs that have done 10% in 2026 already, right? So this is one investment I'm going to really, really put my eyes in 2026. And how are you going to invest in gold? I know some people are like, good. How am I going to buy gold? Don't worry, I'm going to tell you. This is another graph to show you the different, this picture, I sent it to a friend. That's why I did that marker in it, right? In 2023, a gram of gold was 50K. As at August 2023, a gram of gold was 50K. And this was 2024 when that idea was coming to my mind. Gold was around 90 something K, 100 and something K. That's when it was coming to my mind, buy this thing. But I did not buy it. Now, gold has crossed 200K, even though it has come down a bit, but it has crossed 200K as of 2023. 2025 December, it was actually around 200k, but I think now it's around 190 something, because it's come down a bit, but it's going to go back up. It has cost 200k in 2025, right? And the trajectory is still going up. So how can you buy good? The first way you can buy good is, of course, physical good, but you have to be very careful so you don't go and buy fake something, right? Physical good, you can see people that you can get a gram of physical good as at 190k right now, a gram at 190k. And of course, this is like you buy it and safe lock it, whether you put it in a safe or you put it in a bank safe, bank vault and all that. This is a very, very measurable, valuable measure of wealth and investment that you can actually do for yourself, and you can actually pass it down to generations, right? Before, I used to think, I used to have this mindset about, I'm not going to be materialistic and all that. But guys, this is not about being materialistic. This is about actually, having a physical, valuable, tangible investment, and that is good, right? And I'm not talking about good. I'm not talking about good because you want to be flaunting it up and down and all that, but as per a store of value. That is good, right? The second way you can invest in good is through ETFs that track good companies, right? So in the US stock market, we have a lot of ETFs that, track good companies that mine good. And these ETFs, like I said, they did amazingly well, last year. You see an ETF like RNG did 128%, GDSJ did 125%, GLD did 43% in 2025, right? And these ETFs, you can find it in apps like Bamboo. When you go to Bamboo, you can find all these ETFs. And again, you don't need to have 1 million naira to buy this one. You can even start with $10, $20, and just be buying it like that. I've already bought my own this year, this January. I already bought all these ETFs and I've already added them to my portfolio, right? So these are great ways to buy good. The next way is through an app called Alt Invest. Now, Alt Invest is an investment app by Stanbic IBTC. So Stanbic IBTC has an investment bank and a division called Alternative Bank, and that Alternative Bank has an investment app called Alt Invest. So Alt Invest basically helps you invest in commodities, right? And the commodity that they are investing in is gold, and it's from their app that I brought this graph that showed. So as of 2023, when they started that Alt Invest, they were selling a gram of gold at 50k, but now they're selling it over 200k in same app. Something that they were selling 50k as at 2023 is now 200k in the same app, right? So you can start buying all this gram of gold, right, through Alt Invest. I think there's a particular number of gram you can reach. I don't know if whether it's 20 grams or 50 grams. I can't remember the particular number of gram you can reach. And you will actually request that you want the physical gold, and they will send the physical gold to your location for you, right? That's how amazing it is. So you can give yourself a target. Every month, I'll buy a gram of gold. Every month in 2026, I'll buy a gram of gold. It's a great way to, build your wealth and, maximize your money in 2023, right? So these are the different ways you can buy good, and this is like the final investment and I'm going to be putting my money in 2023. So final word, start now. Like I keep saying, start now. The next best time to invest is now. Don't wait again. You've already lost a lot of time. Invest now, right? Procrastination would make you regret your actions later. Like from my example, from good that I did not invest in since 2023, it's paying me now because I know how much I would have made. Imagine if I had bought 4 grams of good, 10 grams of good. Imagine how much I would have made right now, right? But you have to start now. The next best time is to invest is now. The procrastination that you had in 2023, 2024, 2025 has been forgiven, but start now, right? And set investment targets for yourself. Do not just invest once and go to bed. That's another mistake that investors do. They invest once and they go to bed. You don't grow wealth like that though. You cannot invest 10k and be thinking that the 10k would compound magically into 10 million by December. No, you have to set a target for yourself, because the more capital you invest in a security, the more your return. So I keep talking about apps that have stocks that have done 100% in 2025. If you invested only 10k in that app, in that company that did 100%, your 100% is just 20k. We hope you know that. But if you invested 100k, your 100% is 200k. If you invested 500k, your 100% is 1 million. If you invested 1 million, your 100% is 2 million. If you invested 2 million, 100% is 5 million. So that's just it. The more capital you have in a security or in an investment, the higher your return, the higher the monetary value of your return. So do not just invest 10k just because I said, oh, you can start with 10k, then you just invest 10k 20k and you go to bed. No, you have to set a target for yourself that every month I'm increasing the capital in my portfolio so that my returns will be, more weightier. That's how you make money. It's not by investing one off and just going to bed. No, you have to make it a point of duty. You have to set targets for yourself every month. And that brings me back to my first point, PYF, right? A portion of your income every month must be sent into your future, must be put into investment vehicles that actually make money for you, right? And then the third thing you have to do is you have to track and monitor your progress. Track and monitor your progress. Don't just invest and go to bed. Like I said, you have to track and monitor what's happening in the market, know when to readjust, know when to buy more of that shares, when to sell the shares and all that. One of the things I did this year was to invest in more Seplat shares. And why? Because of what happened in Seplat. Tony Elumelu invested and bought, is now the highest majority shareholder in Seplat, and just last week they've made him a non-executive director. And if you know Tony Elumelu, anything he touches, it becomes good, right? He's like a very, very good he's a very, very good entrepreneur, right? And Seplat, through his leadership, is going to experience a lot of changes, a lot of greatness and all that. And investors are actually, their sentiments are actually shifting towards Seplat and all that. So you have to pay attention to the market, pay attention to what is happening in all those investments you are making, so you can know how to readjust your investment at any given time. And number 4, automate as much as possible. Automate where possible. Most of these apps can actually help you automate. Apps like RiceVest, Bamboo, right, CarryWise, they have automated features that actually help you automate your investments. So you can link up on the bank account, right, that every month deduct so and so amount. And this actually helps you with step 2, that's setting investment targets for yourself, right? You can link a bank account that every month, maybe on the 30th of every month after you receive your salary, the app should deduct maybe 30k, 50k, 20k, 10k, depending on what you want to do, and invest it in those assets that you have with them, right? Automate where possible. This actually helps you stay disciplined and stick to your investment goals. So this is where I'll be drawing the curtain for tonight. Thank you so much for joining January's Trybe meeting, and I will see you in February. Good night.